Hello everyone, it's Wednesday, October 29. Today we analyze the euro and British pound charts to assess potential market movements. As you can see, the market remains volatile. Yesterday the euro declined, pressured by disappointing data from Germany. Later in the day, US consumer confidence statistics were released. Although the index fell, it surpassed analyst expectations for the first time in 3 months, bolstering hopes for a recovery to normal levels by year-end. In addition, the US house price index rose and the Richmond Fan Manufacturing Index improved to -4 in October from -17 in September. This backdrop heightened demand for the dollar. With the light macroeconomic calendar due to the ongoing US government shutdown, even minor data points had a significant impact on market sentiment. The British pound is also feeling the pressure from the dollar, particularly after British Finance Minister Rachel Reeves emphasized the need to strengthen the trade relations with Europe, a statement that contributed to downward pressure on sterling. The situation is unlikely to change until the Federal Reserve announces its policy decision later today. The Fed is expected to reveal the outcome of its two-day meeting. The Federal Open Market Committee is widely anticipated to cut interest rates by 25 basis points to 4% from 4.25. Many expect the accompanying statement to reflect a more dovish tone. However, while several officials have recently advocated for lower rates, the need for cuts was explicitly stated only for October, leaving the future policy path uncertain. Disappointment with the central bank is growing, with some policymakers urging rate cuts to stimulate economic growth and support the labor market, while others warn against inflation risks potentially spiking next year. Thus, it remains uncertain whether today's announcement will trigger a significant dollar sell-off followed by a sharp rise in risky assets. Much will hinge on Jerome Powell's subsequent comments. The 25 basis point rate cuts appears to be already priced in by the market, making guidance of the future trajectory of monetary policy the key factor. Regarding other updates, today's macroeconomic calendar offers no major statistics from the euro area. In the UK, we can expect data on consumer credit, individual lending, and anfd money supply. Now let's move on technical analysis. The 1-hour EUR USD chart suggests that a decline followed by a false breakout at 16.21 would trigger a buy signal, with the euro potentially recovering to 1.1645. A break in consolidation above this level would lead to a continued rally to 1.1668, likely opening the path towards 1696. At this level, I would recommend going short on a rebound, targeting an intraday correction of 20-25 pips. Short positions at 1645 and 1668 should only be considered on a false breakout. In a bearish case scenario, a break below 1621 would drag the euro down to 1602, paving the way for further losses to 1579. At this mark, it would be wise to consider a long positions on a rebound, aiming for a 20-25 pip move. Long entries at 1602 and 1621 would only be relevant in the event of a false breakout. Turning to the GBP USD pair, the British pound remains under pressure and is likely to hit a new local low around 32.28, where buyers are expected to step in. A false breakout at this level would generate a buy signal, pushing sterling up by 25-30 pips. The main target for bulls would be 32.77, and only a break above this mark would open the way toward 1.3310. In case of a more dovish Fed stance, the British pound could recover to 33.39 and even 33.67. At these levels, it would make sense to consider short entries on rebound, anticipating a 25-30 pip move. Going short at 32.77 and 33.10 would be prudent if a false breakout occurs. In case of muted buying activity at 32.28, the pound sterling would likely slide to 31.79 and possibly reach 1.3142. At this mark, I would recommend going long on a rebound, counting on an intraday correction of 30-35 pips. Long positions at 31.79 and 32.28 should only be considered after a false breakout. Best of luck to everyone.